Welcome to Subramani. One of the biggest advantages that an individual has while managing his own money or his family money is that he or she does not have to answer to anybody. Now, this is a huge advantage and it is a huge disadvantage. When you confront somebody saying, why have you done this, they don't really have an answer. Oh, these shares were bought by my father, I'm still holding. Or when my father died, he told me that this is a good share to hold. That's true. When your father died in 2019, that may have been a good share, but in 2022 you have to take your own decision, right? But the advantage for an individual, the fact that he or she does not have to answer anybody, means that the advantage is you can hold on for a very long period of time. You need not worry about this quarter what is happening or next quarter what is happening. You can go look at the advantages that the company has and keep holding for a pretty long period of time. For example, if you take Walmart, there's nothing great about that company, but the company started, then when it had economies of scale, it just kept on passing back the economies so that it would kill the other competition, right? So similarly, if you take an Indigo airline, nothing great about its ROC, nothing great about its RONW, but there's one thing which they're doing. They're fanatical control over cost and the fact that they built some 60% market share. That's not easy, but the thing is it great? Is it contributing to their profits? Maybe yes, maybe no. Maybe it's a very difficult question to answer, but over a period of time, what a 60% market share can do is clearly visible in Maruti. When you have 60% market share, you can control the markets for sure. So the thing is, when I buy a share saying, okay, this is the advantage, then what is the point in selling off in 2 months? Because in 2 months, Indigo price could go from 1800 to 1900, but similarly, it could also go from 1800 to 1500. The question is, if you are taking a short-term view, are you really looking at the advantages that the company has? What does the company, does it really matter if you're taking a 50-day view, unlike taking a 300 week or a 300 week view instead of taking a 3-week view? So then you are trading, you're very clear that you're trading, here you're investing. So as a long-term investor, you go and sit and analyze a company and say, okay, these are the advantages, this is what the company does, and therefore I want to buy, and therefore I will only see whether the market share is increasing. So in Indigo, I am not worried too much about the ROC, RONW, but I want to see whether the market share is going up from 57 to 58 or is it coming down from 57 to 56. Will the Tatas get their act in place and will it become a threat to the Indigo management, right? These are the questions that you have to answer, and it is not just answering are the ratios good. Maybe the ratios are not good, but one day when the company starts doing well and making money, maybe the ratios will fall in place. So you have to know at what point what to look at and why you are looking at it and why you will hold on for a long period, because you think that is growing. You think, oh, market share is growing, so therefore I will buy. You could be completely wrong. In Zomato, you would have been completely wrong if you bought at 80, and I thought 80 was a good price to buy Zomato in. I actually bought, I sold at 90, and then I bought again now at 41, 45, 47 at various prices. Actually the reverse, 47, 45 and 41, because I got because of my memory failure. But whatever it be. So I'm saying, so if you have a long-term view, you have to look at the parameters which you are looking for, right? Don't look at only the money part. Yes, of course, the money part is very important. If it is not profitable, if it's throwing money to build market share, if it is doing all that, then I wouldn't even think of touching the company. What is the big point in buying that company? But if you are buying for market share, then please wait patiently, see whether the market share is getting built, what else is happening, and then you take a decision, right? I don't see even institutional investors having the guts to take a long-term decision unless the fund manager has got tremendous conviction. I can see some such funds, but they are smaller focused funds. Can the large funds take such a saying, this is my style, I will be contrarian, this is my style, I will be value, I don't care if it is growth which is happening, right? The ability to take that stand, I think it's much easier for you as an individual than it is for a fund manager. I've said in various videos that the advantage that we have as an individual investor over a fund manager is that we can handle our own bias. We should be able to handle our own biases. We should understand that the what distinguishes us, one investor from the other, is not really the access to good quality fundamental information, but also to your own behavior. It is your behavior which is going to create your alpha, not your stock selection, right? Or you understand why you are buying a share and how long you will hold, simply independent of what the market thinks, and you will only monitor that. You will, like I said, in case of Indigo, you will only monitor the market share. Is the market share increasing? If the market share increases, I know the ratios will fall in place, but is it happening, right? So similarly in Zomato, are they increasing more deliveries? Are they reducing the cost per delivery? Are they creating more opportunities for their people to earn money, right? These are the questions to be answered, not whether the price is fluctuating in the market. Of course the price will fluctuate in the market. Price in the market fluctuates even for HDFC Limited or HDFC Bank, which are so old and well established, and there's nothing happening in that on a day-to-day basis. Nothing great or fantastic is happening, but the fact is it comes with quarterly results with 30% year-on-year growth. It is easier to hold. Whereas with a Zomato or any of the other shares, it's very difficult to hold, because the data that is being given to you actually increases FOMO, and there is envy saying, oh, he bought 10,000 shares, he bought 20,000 shares. Yes, so all that is true, but the question is whether he, the mythical he who bought, whether he stayed on, right? That's important. Did somebody buy, let's say, HDFC Limited below par? Right, it was a 100 rupee share available at 97.98 and held on for the last 20 years. You would have got very good returns. The question is, how much can you control your own behavior? Controlling behavior is always useful, and all these things of saying, oh, patience is required and all. People talk about that, but does it mean people do it? I mean, hard work pays, but does it mean everybody is working hard? That's a question which you have to answer yourself. So similarly in investing, your investor behavior or your behavior is far more important than the stock selection and things like that. And if you are looking as to why you are buying a share, don't lose sight of it after 2 months, because the change in the market change in the market price of the share on a short term basis should not deter you from holding it for the long run. Thank you.